What's up investors, Spier here. Welcome to the new investing log format, in which I will update every 2 weeks on my progressions and everything I looked at in my investing journey. My investing journey mostly consists of value investing. I'm trying to build a very concentrated of up to 10 or 12 stocks based on the theory led by Warren Buffett, Charlie Munger, Peter Lynch, Nick Sleep, and others. In today's video, we'll talk about two subjects. First is the market volatility and all the craziness happening in the past few weeks, and especially in the past last week with tech stocks and all the high growth stocks. And the second part, we will talk about Microsoft trying to control the entire gaming industry, and we will visit the blog post that I wrote that you can see right now. I wrote a really in-depth research in my newsletter, so we will go through that in this vlog. The stock market is in a correction area right now, with corrections happening mostly in high growth stocks, where value stocks are the beneficiaries of this stock market movement. Let's look at the Nasdaq, for example. In the past few weeks, this is going down really fast, and if we look just at the past 3 or 4 weeks, we can see minus 12% correction. Of course, this means nothing if we look at the broader image for more than the last year. Since 2020, it was going up really fast, but in this area we can see a really major correction that actually makes the past year almost flat out, if we look at it like that. So the Nasdaq didn't fare so well in the past few weeks. But I think the interesting story is in individual stocks, because the individual stocks of the high growth stocks, as I mentioned, they were hit the most because they were having the most growth in 2020 and 2021, which I deem was overvalued and was sort of a bubble. And you can see it really clearly if we look at funds like the ARK Invest. So if we look here at the ARK Invest, we can see in the past few weeks they were having a really big meltdown. If we look in the past year, we can see they are almost 42 or even 50%. It depends on when you invested in ARK Invest. So investors going into ARK Invest hoping to capture the massive gains that Cathie Wood got when she started in 2020, they mostly lost everything, not everything, they lost almost 50% of their investment. But it's important to get into perspective here, because if we look at the broader image, starting in 2020, she still got massive gains, but most of the gains that she had in 2021 are now gone. So I think it's really the story of mean reversion. Those stocks, specifically the high innovation, high growth, not really getting into any profits right now, stocks were really highly valued in 2021. So their meltdown right now is most expected. I don't know how to say it. Obviously, you can't expect the exact time it will happen, but I think it was pretty obvious that they are overvalued. It's just that nobody really knows when it will go down, so it started going down right now. And it's so much so that even Berkshire Hathaway, this is a big title, but Berkshire Hathaway is now outperforming ARK Invest because they are slowly growing. And it was the joke that value is dead. It's always happening in these times where there is market exuberance in some field, and you see that value is underperforming relatively. But in the long term, as you can see right now with Berkshire Hathaway and ARK Invest, Berkshire Hathaway is outperforming ARK Invest in the long term. Of course, it depends when you bought in, it depends on how you invested your money, because if you invested on the top of ARK Invest, you lost a lot of money. And ARK Invest are sort of the new guys on the neighborhood when we talk about investing for the long term. So it's easy to pick on them for a lot of people, especially on Twitter. But expecting this downfall is really hard, and knowing where to go in is really hard. And one example for that is Pat Dorsey. As you can see here in the Dataroma details about his investments since September 2021, he got in on so many stocks that gone through this meltdown right now that he has massive losses. On paper, of course, we don't know when he sold. He could have sold before the meltdown, but it just shows you that even a super investor like Pat Dorsey is not shielded from these market volatilities. And I think that for perspective, it's important to look at specific stocks, because if you look at the Nasdaq or the S&P 500, it's so much broad market that you can see only a few percentage of movements every day or even every week. But if we look at individual stocks, especially the stocks that were high growth and enjoyed all this market exuberance in 2021, we can see a very massive meltdown there, which might be opportunities right now. So let's look at a few. We have Snapchat. So you could see here the top of 2021 and then going down. If we will focus on that, they are going down 63% from these tops, 63%. Of course, on the broader image, they are still good enough if you started in 2020, but they almost lost all their gains. Of course, you can tell any different story about this specific stock, like for example, iPhone blocking the ad tracking harmed Snapchat specifically really badly, so they lost all their momentum. It might be true, but the same story is going for a lot of other stocks. Let's look at Fiverr, for example. The marketplace. So if we look since the highs of 2021, they were losing 68%, almost 70% loss for the stock. If we look at the bigger picture, they are going down back to where they were in 2020. So losing all the gains they did. And you can tell the same story we told about Snap on Fiverr, because Fiverr is a marketplace for freelancers working from home. There is no excuse for this specific downfall to be as massive as Snap. And we can go further. We have Shopify. Again, if we look from the top, we see 40% decline. We look at the broader image, we can see it's going back all the way to the price of 2020. Next, we have Wix, same story, losing 43% in the past few months since October. Looking at the broad image, going back to the price of 2020. And not only, by the way, not only tech stocks, we can see Beyond Meat going through a similar meltdown, all the way 35% in the past few months, and going back to the price of the dip of 2020, not just 2020 in general, but the dip of March 2020. Of course, there might be a macro economic reason for that. The Fed wanting to raise the rates or anything like that. I don't like to meddle in these details too much, because the bigger picture is not interesting for me. It's just the specific stock, as I want to be a stock picker. It's interesting to understand why things might happen, but at any point, a company is either undervalued or overvalued on normalized terms. You know, the DCF analysis, the expected returns, things like that. The crazy stories these companies told were unsustainable, at least in my opinion. The last company I want to look at is Netflix. So Netflix, you can see a big meltdown, 42% from its highs. And you can see, again, back to the 2020 prices. But on Netflix case, you can see a bit of a bump here. And this bump is because of Bill Ackman. Bill Ackman announced on Twitter that he purchased more than $1 billion worth of shares, 3.1 million shares of Netflix, and making him one of the big holders of Netflix. And he alone, by this message, at least that's what the general opinion is, he alone caused this slight spike on the price of Netflix in the last 2 days. And I think the general story here is that great investors such as Bill Ackman now think that some of these companies, in this case Netflix, is a great opportunity due to this price meltdown. And I myself was tempted to look at many of these companies to maybe invest, but I stopped myself because looking at the meltdown of the price right now is being focused on only on the price and not the fundamentals. who's to say that even if they went back to the prices of 2020, who's to say that the prices back in 2020 weren't overpriced already? So focusing on the fact that many of them lost 40% or 50% of their value is not really doing the fundamental analysis. So it is tempting, but I'm adding a lot of them to my list to do a deep research, but I'm stopping myself from buying a lot of them on on a rush, because I want to be sure that every investment that I do is really great value investment, and my portfolio is aimed to be super concentrated anyway, so I don't want to swing my sword unless it's a really good opportunity. But it is tempting with all these companies, and we see great investors such as Bill Ackman taking advantages of it already. So now to the second part of this vlog, which is the article that I wrote about Microsoft taking control of the gaming industry in the long term. The reason I wrote this article is following their purchase of Activision Blizzard for $70 billion. I did do a research about Activision Blizzard a few months ago, and I deemed that their culture is too problematic, and I did that research before all the sexual assault and things like that. I talked about the culture before it went really, really bad, and I determined that it's not a value investment yet because the price is too high. But then Microsoft bought them for a premium of 40%. So the first question I asked myself, was I wrong? Was I wrong about my assessment of Activision Blizzard? And I think not, because thinking about Microsoft buying Activision is being speculative, and I want my investments to be as safe as possible value investments. And Activision Blizzard on its own wasn't worth the price that Microsoft paid for it, because they couldn't focus on the long term. They couldn't fix their branding as employers and outwards really, really fast, and all these kind of things, they were harming the company in the long term. So I deemed they are not that worthy of the money that they with the market cap were. But with Microsoft buying them, they are now able to focus on the long term. So the picture is different. With a buyer as big as Microsoft, Activision Blizzard money flows are so minimal compared to the entire corporate that there is no investors pressure as there is for directly company as Activision Blizzard. So it's almost as if Activision Blizzard is taken private now to focus on the long term. And within, not only that, within the bundle of games of Microsoft and their abilities as a corporate, this asset's worth much more. So Activision Blizzard, in my opinion, wasn't worth this price, but for Microsoft, it is worth this price. So I don't think I was wrong to say that they were overvalued even after their price meltdown, but I think that for Microsoft, it is worth it. So I wouldn't speculate on Microsoft buying them. So that's that part. Now let's go to the article that I wrote. So my main idea here is that the gaming industry is now ready to have the revolution of a subscription service, allowing customers to access all the games, the assets, for not for free, but unlimited within the subscription. So this is a revolution we saw in a lot of other entertainment industries. We saw it in the music industry. For example, we started with small end user retailers selling the CDs, and then economies of scales for selling these CDs, which was in the music industry, iTunes. In the gaming industry, it's Steam. And then they went to subscription service instead of buying each product by its own, with Spotify, Apple Music, whatever. We also saw it in the video industry. You used to buy DVDs to go to the movies, and now you have a service like Netflix. Gaming is prone to this change too, and this model is much more economic and much better in every term. And I think that Microsoft is going to do that for several reasons. So let's start going on them. If you want to go into details, you always can go to the link below Also subscribe to the newsletter. So first, this thing is going to be so much harder than it was for Netflix. My example for that is because Netflix did it before everyone realized how much streaming and subscription service are worth. So Netflix was able to get the IP to show shows like Friends and Seinfeld and all the shows of Disney and the movies of Disney and many others, and Fox and all those kind of assets. We were able to get them for relatively cheap and bootstrap their service on other people's IPs. And creating IPs and creating content, this is the hard, really hard thing to do. So they were able to leverage other people's content and then start producing their own after. And by that time, the other competitors realized the value of streaming. So Disney went with Disney Plus, you have HBO Max and whatever. But in gaming, everybody already knows this is the most valuable things to do. So the other companies won't just give you their IP that cheaply. We know that the jig is up, basically. So the best strategy to win this battle is basically to have as much assets on your own. And Microsoft is doing that really well. And we will get to that. But first, let's look at how everyone realized that and how everyone in the tech world is trying to get a chunk of it and maybe get it. So in the article I wrote about Google, for example, launching Stadia and going into it really hard back in 2019, only to go back really fast. Their library is still too small and gaming studios don't want to cooperate with them. And so Google tried to start their own studio only to close them less than 2 years later. Next is Amazon, and Amazon have Prime Gaming. Let's look at that for a second. So Prime Gaming is a subscription. It's already up. It has a lot of games, as you can see here, a lot of really good games, but not good enough yet. Their power is basically on combining it with the other Prime services for TV and for the general Amazon Prime. It's good, but their library again is too small, and they tried to, and still trying to, create their own games in the studio Amazon Games, but they canceled so many titles. You can see here, Amazon can make just about anything except a good video game. That's a great title. They just can't seem to be able to do that. They canceled a lot of development, and the games that they did got out. For example, you can see here the New World game. The amount of active players went down dramatically, really fast, losing more than 95% of the active players within a few weeks. In the article itself, you can see other companies that I mentioned. You can see it in the link below. Just too tedious to go through all of them. But let's see why Microsoft is actually superior, why I think they are superior. I think that they're in a great position because they are in this industry of game development and games in general for decades now. They're just ready compared to all the competitors. Google wasn't there and Amazon wasn't there, but Microsoft has been there with Xbox and with different games for almost 30 years now. And so they have the expertise in-house, they have the library, they know how to do it. They are best positioned to do it. And not only that, they understand the value of having a large enough library, and they understand that companies, independent studios, won't contribute their content to this library because the platform is the ultimate winner. Every studio wouldn't want to do that because it's a bad deal relatively for them, and it's changing the entire dynamics of the gaming industry. So Microsoft basically started buying everyone. They bought Bethesda, which has Doom, Fallout. They bought Activision Blizzard recently. They bought Mojang for Minecraft, Coalition with Gears of War, and so many studios. And my list here is not even exhaustive. And not only that, they have a strategic partnership with EA. So the library automatically includes everything that EA has. So it's already the biggest and best library out there. So I think that the gaming industry is about to change very, very deeply. And although I am an sort of expert in this field because of all the research that I did, I think that it might go to a place where it's uninvestable for the next few years because of this revolution. It's unexpected. We can't really know what will happen with the business model of the entire industry. If this will happen, what will, like companies, big companies like Take-Two, for example, that is highly dependent on their online offering for GTA 5 and the sales, the store sales for GTA 5 and other games, of course. But if we go to a subscription-based service, what will happen to this model? How will it change Take-Two? Will it erode their profits and everything will go to the platforms, to huge platforms like Microsoft? There are many questions here, and that's it for today. I hope to see you next time as well, and I hope you will like this format of free talk and this new test that I do. And I'll see you here next time. Bye bye.